Hello, my fellow YouTubers, subscribers, and friends. How are you? And also my students or my learners, how are you? Hope you're having a great day. This is Teacher Patty. Welcome to my YouTube channel. So I'm still continuing because remember I promised you when we're doing the debits and credits about the explanations of the assets, liabilities, expenses, etc. So I am bringing that to you. So the noise at the background is my little daughter, and I've asked her to keep quiet because I'm recording. Clearly, she's not doing that. Okay, so let's just get on to it. Okay, so assets, looking at the definition of assets. So according to the IAS and the IFRS conceptual framework, they define assets as the decreases. They define, expenses, sorry about that, as decreases in assets or increases in liability. So like depreciation is an expense, it's a decrease in an asset. Or increases in liabilities, for example, interest on loans is a result of an increase in liabilities. And expenses, they result in decreases in equity. So in what sense? Loss or profit made within the current financial year, it's part of the retained earnings. Retained earnings is part of equity. So this is how this decreases equity. Other than those relating to distributions to holders of equity claims, other than dividends. So if you've noticed, when you're in grade 12, we don't put dividends as an expense. We put them as part of, we record them in the statement of changes in equity or in the note for retained earnings. We don't put them in the face of the income statement because in the income statement, we're putting expenses in terms of operations, not in terms of amount distributable to shareholders. So I was just looking for an easy to use term, having in mind people who've never done accounting and people who are in grade 9, 10, 11. So an expense is the cost of operations that a company incurs to generate revenue. That's the definition according to Investopedia. Expenses, so we're still continuing the expenses, but now I just want us to look at the examples. So depreciation on equipment, when the asset is losing value at a certain percentage because it's movable, it's part of an expense. Insurance is an expense. Insurance expense. Maybe let me just, okay, let me just edit that. The reason I'm strict in saying insurance expenses that if when you do grade 12, sometimes you get insurance, sometimes you get insurance income where they've made a claim and the insurance is paying out. So I needed to make it clear that this is insurance expense. Then fixed interest rates incorporated into loan agreements. Those are your interest on expense, like from loans, credit cards, or overdraft, the rent expense, salaries or wages, water and electricity, commission expense, cost of sales, repairs and maintenance, loss on sale of a non-current assets when you're selling equipment or a vehicle, and then we make a loss on that. Bank charges, marketing and advertising, promotions, cost to company, that is wages, salaries, payroll taxes, medical aid. Just want to fix this bracket. Medical aid, UIF, SDL, yeah, those that form part of cost to company, office administration, accounting and audit fees, legal fees. Continuing with the expenses, the office supplies, consumables, stores on hand. Just need to fix that. Consumable stores on hand. I usually get people asking me, what is consumable stores on hand? Look at that. This is more of your toilet papers, your handy cleaning materials. They form part of the consumable stores on hand. Rates and taxes, entertainment and meal expenses, those office lunches you have in the office, the picnics, the year-end party functions, travel expenses, credit losses or write-offs, trading stock deficit. So that's the end of our definition and examples of expenses. So I switch off the comments. So if you need to contact me, here's my information. You can send me a WhatsApp. You can email me. And my YouTube channel is Accounting with Teacher Party. So thank you so much. Goodbye.